A. Balasubramanian, Chief Executive Officer of Birla Sun Life AMC joins us. Bala, good morning. Thank you for joining us. Bala, the price action in Indian stock markets of late has been breathtaking. But the concern is that is this as good as it gets? And are markets pricing in all the good news?
Yeah, I think this observation, of course, to large extent is now being coming from almost everyone, whether the market has been discounting some of the outcome that could potentially everybody has been expecting on the political front too early. While one can, of course, argue that the market have been discounting most of the expectations, especially on the stability that all of us have been expecting more from the Indian government point of view. While it is true, at the same time, these also need to get measured on the basis of how that reflects in terms of corporate sentiment. There's two parts to the discounting of prices. One, of course, the corporate sentiment, and second is the investor sentiment. Investor sentiment, of course, today reflects both more in the form of an FIIs taking a bet on India, and as a result of that, we have seen actually the overall momentum in the market has been very good. Having said that, I think what we believe actually could potentially happen is, while the market could discount some of the expectations, at the end of the day, need to be looked at from the point of view of the longer term outlook, which is the next 2 to 3 years kind of roadmap. If there is a stable government and the policy framework which has been rolled out in the last few years, if the focus increasingly for the new government is to get the execution piece right, to get back on growth about 5.5 to 6%, and industrial production numbers come back to about 3.5 to 4%, and some bit of larger directions that could set in with respect to increasing the revenue, at the same time have some kind of discipline on fiscal deficit. These are some of the directions. I think if it comes well within the expectations, then we could probably see the overall market, even if it may feel that it is discounted, but I think we will probably see the directions get better as we move forward. Having said that, we did some kind of analysis while we launched our Emerging Leaders Fund very recently. From 2008 till 2010 till today, the broad index has remained still in the range of 22,000 index. Though one can say that the market has gone up and is touched a new high, but I think one has to accept the fact the last 5 years the market has remained static from the peak of 2008 to the 2014, which essentially means though the market has gone up in the last 2 years, but in the last 5 years scales the market has remained somewhat flat. We also did some kind of another analysis that while of course the broad markets have gone up purely on the basis of the large pool of money that is coming from overseas investors, the domestic investors' participations have remained extremely low during this period. As a result of that, we have seen actually the large proportion of the market, which is other than the 30 Sensex stocks and Nifty stocks and the 50 Nifty stocks, the large proportion of the market have still underperformed. While there is a perceived notion that yes, market discounts, there's a lot of these good news and hopes. At the end of the day, I think if you go by individual stocks analysis and sector analysis, there's still a lot more to go as we move forward, as long as the sentiment towards as a country on the basis of a stable a political economy, as well as a stable economic scenario that we are able to, I think, establish post-election results, we may probably get into a longer-term bull market, though there may be a perceived notion that the market is discounted most of the stuff as of now.
Bala, so in the run-up to the election result, how are you allocating capital? Are you happy to own some of those industrials and economy-related stocks, or you would be looking at cashing out or booking out some of your gains in some industrial names?
Yeah, Nick, I think the way we have played out in the whole the move in the last 4 or 5 months, clearly increasing allocation towards the cyclical sector, which includes the banking, which includes capital goods sectors, which includes some space in the metal space. And wherever we have seen a significant rise, which is not justified and backed by the valuations, even if assuming that something good happened for them post the election, to what extent I think they will be able to justify the price movements. So wherever they have reached certain kind of internal price targets, there is absolutely no doubt that we have been even booking profit on them, and so as to ensure that the discounting factors in some sense does not affect actually the performance of the portfolios post that. But having said that, there has not been any significant change that is being brought in with respect to the cyclicals. Where we see actually that things getting better, I think it's one, of course, the portfolio getting positions on the basis of what's the political outcome, which is of course is more of short term in nature. And the portfolio is also getting positions in respect to actually what kind of expectation that could get built up, purely on the basis of the valuations, purely on the basis of the ability of the business actually to do better, even in a market which will go through tough times. This is what we've seen in the last 3-4 years. Despite the markets have been somewhat remaining flat, except the last 6 months where we have seen the bull market coming in. Clearly, I think the differentiation has always been for the fundos on more on the stock differentiation that you have brought in every sector, including in capital sectors when the earlier period was not doing well. But we could differentiate in the portfolios purely on the basis of our ability to pick stocks, and that still remains even going forward. But having said that, clearly I think from the portfolio positioning point of view, there is a bit of higher allocations which have come in towards the sectors like capital good sectors. There is one thing which you of course consciously avoided is something which is largely debt burdened companies. It may take a lot of time actually for them to come back unless until we see actually the faster recovery, on which there is a question mark in the very near term. Such kind of companies we as a fund house consciously avoided, not taking such kind of bets which will be subject to a lot of volatility, will be subject to very high beta, creating high beta in the portfolios. Such kind of exposures you are just avoided, only to ensure that the portfolios remain somewhat stable and intact even post the election outcome.
Bala, like they say on Wall Street, you should always buy a raincoat in winter. With that logic, is it time to buy into IT? No one likes IT. Everyone's gone neutral on IT. Rupee has stopped appreciating. The management commentary is not strong. In fact, both TCS and HCL Tech have indicated that they would grow above the industry average. So is it time to be a tactical buyer in large cap IT?
See, one of the view which I think as a fund house I've got, Nikunj, is one with, of course, with respect to the rupee itself. I think the market is, I think there are different reports which is floating around that large pool of forex flows will come and that will lead to actually drop in the rupee dollar rates, which ultimately have an impact on exports. And we don't, of course, agree to that argument that there will be a significant change that will come on the rupee dollar movement. With that view, and also supported by the recovery that is being expected, not expected, that is continuing, both in the US as well as some bit of recovery that is expected to come back in the Europe. That actually also gives us the confidence that from India point of view, exports I think will pick up. And the large proportion of the exports will come, of course, from the IT companies. We also discovered in our analysis that a lot of IT companies globally, not IT companies, financial services space globally, were one of the largest spenders in the case of IT space. Their own discretionary expenditures, such as the IT in nature, has been going up. I think most of the times discretionary expenses are not really spent. They are always spent only when times are good. And we believe actually that the times are good, especially for global economy. The discretionary spending is also coming back. The biggest beneficiary of that is going to be, of course, is the software companies. Having said that, we have measured in the form of how much you want to go overweight and underweight into the sectors. And our portfolio at this point of time is actually a neutral weight rather than going overweight and even underweight, which essentially means that we continue to hold our convictions on the sectors, though it may underperform in the short terms due to various expectations that we have just mentioned earlier. But I think in the longer term, purely on the basis of the cash flow and the ability to generate the new business orders and the ability to actually maintain the margins, all those factors I think makes us believe that the sectors will continue to do well over to medium to longer term.
Bala, I just want to get back to your NF4, Birla Sun Life Emerging Leaders Fund. How's the response been so far?
It just opened today for subscription. It's closing on 30th of April. We did actually a pre-fund launch covering about 30 markets through the video connections as well as through the physical activities across the country this year for the last almost 10 days. While, of course, engaging with the distributors across the country as well as the investors, there is a bit of increased level of acceptance towards equity as an asset class. That I think makes me feel happy that already, finally, I think people are realizing the need for allocation over equity has to go up very significantly. So that feeling definitely is there. And second is, as I mentioned earlier, that if I look at the index at a rebase of say 100 in the month of in the year 2010, and then where that 100 I think is today on the basis of the moment that we have seen in the market, clearly 100 with respect to the Sensex is 108, but 100 with respect to the mid cap is about 83, 100 with respect to the small and mid caps is clearly 63. That clearly differentiate with respect to the valuation gap that got created in the last few years between the large caps and the mid cap and the small cap. But there is absolutely no doubt there is also an increased level of acceptance that mid cap and small cap companies do badly in an economic scenario which is downtrending. At the same time, these are some of the stocks which generally participate in the market if actually the economic growth comes back. That's also very high level of realization that is coming in, despite the mid and small cap space in the last few years have not done that great. So that's why I see actually the general acceptance towards equity is rising. And second, people are also willing to accept the fact that I think if there is a pickup in the overall economic growth, there is a need actually the larger market to participate, which is covering other than the 30 stocks and Nifty 50 stocks. And that's why we feel actually a lot of money could also come, not just only from domestic investors, even overseas investors. In that background, I believe that the acceptance levels in the market is very good.
So, Bala, emerging leaders or emerging sectors, it's a very broad definition. Give me a flavor of what would you buy in that fund. Because most of the sectors which currently are doing well, they're old sectors. When you see you're betting on emerging sectors, emerging themes, what are you betting on?
So I think we put out in our presentation, Nikunj, clearly while the last few years has been more stock specific, but if you look at those stock specific, which are the sectors in which it has come in, it has come largely in the IT, pharma, agriculture, auto ancillaries, and even in the case of media and e-commerce, and these are the areas which has come. But as we move forward, clearly I think we believe that the similar kind of trend will continue. Within those sectors, we'll still believe that a lot of emerging leaders could evolve in the listed space, in the mid and small cap space. So having said that, one of course identifying such kind of companies which are relatively undervalued, run by good management. At the same time, the ability of the company to deliver consistent performance from the shareholders' point of view remains very high. And having said that, there is also provisions which are kept in the offer document to invest outside this universe up to 30%, which again essentially covers maybe the mid and large cap companies, which again purely on the basis of the ability of the management actually deliver next 3 to 5 years kind of good performance from a shareholder's point of view, which again falls in various sectors, which includes the sector which I mentioned earlier. But within that, I think it's more a stock specific thing which will ultimately help us in building the portfolio. So when you actually deep dive into various sectors, I think we came back actually to the fact that while of course the sectors is not the right way to look at in terms of bottom of stock ideas, it has to purely come on the basis of the relative valuation which the companies are offering with respect to their high potential growth which the companies can deliver. As long as that growth expectation is high and valuation is undervalued on a relative basis, they actually become a potential investment opportunity for us. And that's the way we looked at the investment ideas for emerging leaders fund. Having said that, then finally the portfolio construction, when we are looking at it, we are looking at by putting a high conviction on the basis of our research recommendation as a fund house, internally what we have created, as well as the portfolio manager's choice of investing not more than about 30 companies, which again makes us feel confident that yes, we will be able to find winners as we move forward.